A tough day on Wall Street. Fintech, one of the groups getting hit hard with PayPal, SoFi, Square, Robinhood, and Coinbase seeing red. The more traditional banking stocks also dropping. Our next guest sees even more pain ahead for the big banks as Fintech revolutionizes the space, spurs epic growth. Joining us now, Jackie Reeses, former Square Capital lead. She's now CEO of Post House Capital. Jackie, great to have you with us.
Oh, thank you. Good to see you.
So you wrote this white paper about the disruption being forged by Fintech, and that's really caught on fire, so to speak, in banking circles. And so, Jackie, I'm wondering, why do you think there's so much money being poured, VC money being poured into Fintech these days? Why can't traditional banks do that from within with their balance sheets and massive assets?
Yeah, great question. And today, the top 15 banks in the United States hold $13 trillion in assets. So the big banks hold huge balance sheets, and fintechs still custody their assets at these banks, and they have a role. But what you're seeing is a bifurcation of balance sheet infrastructure with traditional banks and fintechs becoming the consumer front end and the experience that customers want to use. And so you see this bifurcation into a high value trade and a low value trade. The customer front end is fast growth, highly profitable, balance sheet light, and has absolutely no legacy infrastructure. And so the business models between traditional banking and fintech are vastly different.
Jackie, it's Karen. Thanks for being on. I understand what you're saying, but we're not there yet where, their back end is JP Morgan, all they do is back end. And we see vastly different valuations, right? And JP Morgan, for example, has 50 times as much assets under custody as a Robinhood. Yep. How is it that do you think this will continue, this valuation differential, that fintech gets a forever growth multiple and legacy gets a melting ice cube multiple?
Look, today you see a massive amount of funding going into fintech. And so in the last 10 years, there's been a 10x increase into fintech, where in 2020 alone, you're seeing $20 billion invested in the asset class. And there's an incredible amount of invention. What you are seeing, and this is why there's a difference in the valuations, is the growth, the profits, agility on balance sheet, and no legacy. And so you have to look at the growth being achieved by the largest fintech players and be absolutely blown away by that levels of profitability and growth being achieved. And you contrast that with what you're seeing at the traditional banks with low single-digit growth. And I think there's just a vastly different way that they're operating and growing their businesses.
Who do you think is the most likely takeout candidate, Jackie, in fintech?
Well, I don't know who's a likely fintech takeout candidate, because these companies have achieved pretty significant scale at the top end. The companies that I see that are incredibly well positioned, and frankly, most of them have eclipsed the market cap of some of the largest banks today, are Shopify, Square, PayPal. And when we see Stripe go public, I think Stripe will have a comparable market cap when it goes public as well. They're just incredible platforms and have customers that love them. They execute well and great product market fit.
So who in legacy banking, if anyone, Jackie, should be looking over their shoulder at some of these relative upstarts thinking, you know what, in 10 years or however long, they might be eating my lunch? Is there anybody like that, you think?
Everyone in legacy banking should be looking over their shoulder and asking themselves, what are they deploying from a technology point of view that their customers love? And they should go back to first principles and say, do my customers love what we are doing? And if they don't, they should figure out how to build better products that customers love, have high NPS scores, and show the growth comparable to what we're seeing in fintech. I think if these banks aren't disrupting themselves, someone else is going to do it for them.
Jackie, it's Karen. One last question, since I know you're a disruptor at Square Capital from the very beginning. What would you say to Jamie Dimon right now? What should he do?
Oh, well, I think it's kind of easy. I think he should be buying a large-scale fintech so that he can disrupt JP Morgan from the inside out. I think if he doesn't do it, someone else will. And I think he's got to let that fintech run on its own and not screw it up. That's what I would do if I were in his shoes.
I would love for somebody to tell Jamie Dimon not to screw anything up. Jackie, great to see you. Thank you.
Thank you.
Jackie Reeses. Tim, what do you think?
I think if you look at the technology leapfrog also around the world that's going on, so many people that are underbanked. I mean, fintech is going to grow even faster globally, and the opportunity outside of this country. And I realize we tend to get very focused on the money center banks here, but I think these companies that have been mentioned today, the SoFis, the Squares, and PayPal. PayPal had I think built a major foundation in Latin America before they even really did as much here, or at least that was part of the complementary growth. So agree. I think the global opportunity for these companies is even greater than what we talk about here. Guy,
of course, Karen has to ask what her boyfriend should be doing to survive this fintech disruption. But in your view, J.P. Morgan or Square here?
It's interesting. Well, first of all, you should drop the restraining order against Karen, number one. Number two, given the choice between the two, I think Square still has the most growth potential and is a more interesting company. I mean, you can make an argument that, J.P. Morgan, where they're trading in terms of price to tangible book, is getting a little ahead of itself. With that said, not that I'm looking to play a game of Would You Rather, but I'll add SoFi into that mix, and I think there's a really compelling argument out there that somebody for $15 billion can bring in SoFi and then have an Anthony Noto on their bench who could be the potential heir apparent of one of these banks. So that's where I would look at it.